Dilip Bhatt of Prabhudas Leelathar joins us. Dilip, thanks much. Well, first and foremost, what do you do now? Would you see an intermediate top at this juncture, or you just take today in your stride and go and accumulate those stocks that you missed the bus for in the past 8 weeks?
Sure, I think it's a very easy question that you have asked, but one of the most difficult to answer. And I think the answer is in the question itself. But I think having said that, I think markets have really defied all expectations, and even the diehard optimists weren't too ready that the markets probably will go up by almost about 12% in a matter of months' time on the back of strong FI inflow, which exceeded, as once again I say, everybody's expectations. But I think from here on, what I always say that the caution should be the watchword, because markets have played out in a very different and in a very strange way, because you still find the HDFCs, the Hindustan Levers, the Infosys, all these companies which have very high ROEs and generating huge amount of free cash, still being chased by the FIIs. So they have been pushed to almost to the without any doubt to the overpriced levels. At the same time, the rest of the pack still continues to hover around 15 to 16,000 level of indices, whether it's Reliance or whether it's the NTPCs of the world or whether it's the construction and engineering companies. So I think it's been a pretty kind of markets have shown a very schizophrenic, as what I call approach at the moment. So I think even if one were to really wait for the correction to happen, one needs to be extremely selective in whatever they do, whether it's buying or selling at this particular level.
Right. Dilip, yeah, you were speaking about this bifurcation in the market, where the market is, or at least the FIs are clearly chasing stocks which have given decent ROEs and pushed them up to valuations which are now looking fairly rich. So what would your strategy be? Would it be to look at those where valuations are still reasonable, like the Reliances of the world, like the capital goods and engineering sector? Do you think that they would be next in queue?
Sure. I think in the pecking order, I think the pharma companies still appear to be fairly reasonably priced, in the sense they still look very attractive at the moment. And considering that almost all the frontline companies, whether it's Dr. Reddy's, which probably are talking about a $3 billion turnover by 30, or whether it's Lupin, which is going to hit $3 billion by 30, I think the growth both on the domestic front as well as the patents, drugs coming out of the patents, are giving them a good opportunity. So the companies in the pharma sector particularly look pretty good. I think they still look good for a 40 to 50% rise maybe over next 18 to 24 months. So this is a sector which I think still has a lot of scope. And I would still play the industrial capex game, which I think the way the investments are happening at the moment, I think gradually that will get reflected maybe early part of next year or middle of next year. So probably something like BHEL or a Crompton Greaves, or some of these companies which probably have not participated so vigorously in this particular rise, I think should really see a good movement, because both the companies have all the good parameters in terms of a free cash generation or a high ROE. And I think the worries on the industrial capex is something which is keeping some of these companies capped at the moment. So I think that sector looks good, and real estate also, perhaps I think gradually over next 1 year, 12 months to 15 months, should start looking pretty good, and they have also not participated, and probably the way the ground reality is panning out, I think this sector also looks pretty interesting.
Our thoughts in the entire banking space, so far the numbers which have come out, so whether it's an Axis Bank or even IndusInd Bank, haven't been so bad. You know, they've been pretty much in line, if not a little better, but still the stocks have moved pretty sideways.
Well, I think your observations are quite right. I think as far as the banking space is concerned, this quarter on a YOY basis, whether it's PNB, whether it's BOB, we are all going to see all these banks really showing almost about anywhere between 28 to 35% growth. Maybe ICICI probably we are targeting something like 13 to 15% YOY growth. But not to forget that this entire banking space has had a very spectacular rally in the last 1 month particularly, and of course it had been faring quite well, and now the weightage in the Nifty itself has gone up to more than 30%. So I think the results probably will not really drive the stock prices, but what is very surprising is that market just seems to be in no mood to accept even if there is something which meets the expectation, or even if it is tad bit lower, market just doesn't seem to be in a mood to punish any of these. But on a longer term basis, I think the PSU banks still look very good. I think they still have a very good scope. Of course, the caveat over here is that we are expecting a correction to happen on in the markets on an overall basis, maybe next 1.5 months, and I think that should be about 10-12%. But beyond that, I think banking still looks pretty interesting, especially the PSU banks.
What would you start fishing in the mid-cap space, Dilip? Clearly, as you said at the start of this conversation, there are several stocks in that space which are still behaving like, the index is at 15,000-16,000. What's your sense? Should you be picking up the fertilizer stocks? Should you be picking infrastructure? What would you pick in the mid-cap basket?
I think in the mid-cap segment, textiles really seems to be our favorite at the moment. I think that is one sector where unfortunately you don't have any great management, managements with great reputation because of their past whatever they have done, so it doesn't inspire any confidence. But this is a sector, Lata, I think, where in next 3 to 5 years, I think there is a huge shift which is happening on a demographic basis, on a cost basis. I think we are going to see a sea change in that particular sector, and most of these companies probably would be earning 3 to 4 times the profits what they are doing right now over next 3 to 4 years. So I think most of these companies over there, howsoever bad they are, probably they also will respond accordingly, and the stock prices should move up. So we feel that one should make a basket of some of the textile stocks and buy that. Maybe some of them will be winners and some of them could be losers, but on a net basis, I think they will give very, very decent returns. Lakshmi Machine Works is also a good play on textile sector, so I think we like that also quite a bit. I think apart from that, maybe the transmission sector still looks pretty good, especially KEC International.
Right, just one word on real estate. Where do you all stand in that space? After all, one is seeing some bit of a pickup both in sales and prices practically all over the country.
Well, I think at the beginning of my conversation itself, I said that real estate we really like. I think the ground realities show that things are really happening in a very good way, and the sales are picking up. Even if you were to just ignore that Bombay and Delhi, which has really seen the major activity in terms of the sales as well as in terms of the price movement, and these two I believe account for almost about 60 to 70% of India's real estate. But if you were to go to Bangalore or maybe Ahmedabad, I think you're still seeing a good amount of traction in terms of sales as well as price increase. So real estate, I think, is a good sector to bet on at the moment, despite the fact that there is a flood of papers which are really waiting on the sidelines to really hit the markets. But this is a sector where I think you can still get a very decent return over next 12 to 18 months.